Almost there. Good morning. Good morning. All right. So just one more second. All right. Today can be a treacherous day, meaning yesterday went down, right? And came back up. And well, the S&Ps did. And so it wasn't totally unexpected that it would go lower since prices weren't at support yet. It was somewhat surprising the extent of some of what went lower and how much it went lower. For example, this DK, which is totally unrelated to tech and, whatever, Google and Twitter, whoever was speaking at Washington yesterday. And, initially it was, starting off trade fears, which is still on the news thing. Fear of trade fears. I mean, it's ridiculous already. How long can anybody be afraid of trade fears when this back and forth jawboning is going on and whatever's happening is happening? But whatever. Anyway, so a lot of stocks did come down quite a bit yesterday for one day. Like, for example, like PayPal, things that have been strong. That's a pretty big one-day drop, and that's going to take some time to repair that damage. And I'm looking at this one here, this prior drop like this, which actually took out this support level here, that major support level, and it went down to the next one, whereas this one really hasn't taken out any major support level. It really hasn't at all. This little shelf here took out and came down to the 20. So, we had Facebook, which now looks really questionable as to what it might do here. Right? I mean, it's just sitting right on the edge of the cliff, and it's just kind of hanging up by its fingernails here, but it is down 3 days in a row into that area. Tesla dropped through support. So, a little right there, but anyway, we'll see what that does. But treacherous days, what I mean by that is potentially a turn day. So we talked about multiple time frames the other day and how the hourly chart being in a choppy downtrend, which is right the daily chart here, grinding its way down to minor support. So as it gets down there and buyers begin to step up, and you see that happened yesterday to some extent, bottoming tail, right? The early buyers looked pretty bullish here, and it did. That failed, and it came down another day yesterday, and now today, so far, we have an inside day. So what's treacherous here? What treacherous is the false starts that always accompany the turn day. So where traders anticipate the turn because of the bullish uptrend, as the turn begins to happen on smaller time frames and they jump on board, it can be treacherous because through any bottoming pattern, which has tendencies to do exactly what we see here, right? So you'd say, well, why would anybody want to buy here? Prior low, maybe that's the low, and you're getting in, and your reward to risk is great if it works out, and then wham, right down through and right back up again. That's treacherous for short-term traders, anticipating the turn. And when it works, it's fantastic. When it doesn't, you get slapped and, you wait again. So now we have what could be a turn day, with consolidation day, and then, you get the follow through potentially the next day. But part of our conversation about multiple time frames was when we do have a turn on a daily time frame, which sometimes plays out over the course of 2 or sometimes even 3 days, the intraday time frame has that, shakeouts, retests, time passing by, consolidation that builds a base, whatever that looks like, a head and shoulders bottom, downside shakeouts, retests, whatever it is. You know, we look at things from the perspective of like a bar by bar and putting the pieces of the bars together into a pattern that communicate to us that things are getting ready. So as this potentially reverses here, begins to, and that isn't to say that there couldn't be another drop that comes down to this support in the 20 and then another attempt to drive it back up. That's all part of the bottoming process and the turn. Now, what we're looking for, obviously, is more confirmation. Right? We started to have that conversation a couple of days ago with the hourly being in the downtrend and what we look for on the hourly and then the beginning of the turn. And then eventually it takes out a prior day's high. Also part of our conversation was that if we were to get a bottoming tail bar in the area of minor support and the rising 20 MA, we could be a little bit more aggressive by initiating a position on a bottoming tail bar in that location prior to taking out that day's high in anticipation of it happening the next day. So we'll see if, say, it drops down today and we get that bottoming tail bar and it comes back up. We'll make that decision at the end of the day today. So we'll see how all of this plays out. Qs, that's where the damage was done. Why I was picked on yesterday in DK, which is a gas-related stock, not Qs. So someone had something against me, I guess. I'm joking, but it does seem kind of odd why that stock. I didn't look at the news, whatever, but it was time to get out of the way, and I did, and so be it. The other one more than made up for the little loss in that, and quite a bit more in profit. So the ODLF or whatever that symbol was, I forget from one day to the next because I don't care. And so now this one, these Qs are different than the spiders. And I'll show you the difference because we look at patterns. We're pattern traders, right? And these little nuances are meaningful to us. So what do we have here? We've got this sloping move down and potential, the beginning of the turn here. However, that's going to play out. Whereas in the Qs, we've got the falling off the building type of retracement into minor support and the 20 MA. And there's a wide range bar down, and now it's beginning to stabilize. So that type of pattern is not as attractive or bullish as what we have in the spiders. And so you can see that's the concept of a daily wide range bar being a momentum move in a smaller time frame and creating that void. Now, Mr. Schizo market that we have with the normal interpretation already provided, we know that Mr. Schizo can create situations where big red bars can be ignored by big green bars, which is unusual, but look at what happened here in the transports, which outperformed yesterday and had a turnaround day and is building this base in this area of resistance near all-time highs, which is bullish and looks good. Dan, your mic is on and you're banging around going on there. And what else? YM looks even better, where it's shallow retracement and higher low bottoming tail bars that are happening here. So a little unusual with the differences between these major indices, but it happens. And this has the look of, look, if it can get through these highs here, it should go up to make its move up toward the all-time highs, right? Uptrend, pullback, above minor support actually, but creating support so that there's buyers on dips. You look at it from a bar by bar perspective, that is the conclusion, that there's buyers stepping up on dips, and that is bullish. And if it can take out this little reference point of resistance, it should take this high out without any doubt whatsoever, and then should start moving up toward the old highs. Now, when I say should take that high out without any doubt whatsoever, that is true. So if it doesn't happen, something is wrong and brings us to a conversation of shock patterns, which we're not going to have this morning, but just wanted to make you aware of that thought. Bonds stabilizing here. And what was surprising, yesterday, I guess maybe being the stabilization day, that was a positive for utilities, but look at the day the utilities had yesterday. When I saw that, I was like, wow, that's something. Now, these are in an uptrend, and the retracement was deep. And, it is repairing the damage, as I say, from a deep retracement, and there's red bars ignored. So utility stocks are being bought. And it's a little confusing for me because the fact that, interest rates are stabilizing to moving up a bit here, and it usually goes in the opposite direction. So these intermarket analysis correlations do have disconnects. And when they do, it makes you think a little bit, and, until you figure it out, why the disconnect and what's going on. And, sometimes it takes a little longer to figure out than others, but not that I'm that interested in utility stocks, but the relationships that I look at when they do disconnect, I'm interested to know why. Anyway, well, possibly, but sometimes you get people running to the bonds too, and bonds didn't do much of anything. They just stabilized. So, but utilities, the main focus is the yield. So if I can get a guaranteed yield, well, it's guaranteed, if you're talking, AAA bonds and government bonds and all that, and those yields are going up, why am I going to take the risk associated with the price movement? So, you can buy a utility paying 4% or 5% and lose more than that on the price dropping. So, there's that correlation there, but that's a wide range bar. It's not just stabilization. And that's what caught my eye, the fact that it's a giant wide range bar up, which is super bullish for utilities, and they are in an uptrend. It'll become clearer. Oil stabilizing here, and Alex asked me, and I don't know why this symbol wouldn't come up yesterday, Alex, but it did come up, and I see the huge difference. So this is the continuous contract in crude oil. I put a slash in there. And there is a difference where this came up to the prior high, but you still have the bottoming tail and retracement. And look, so crude oil, and this is I guess the current contract, this is what you guys said yesterday was came up to these old highs here and backed off, which makes total sense. But the depth of retracement is bullish. And let's take a look. It's probably on a weekly chart. Looks pretty good. And it's just a consolidation in a range. So it came to the top of the range. Sellers showed up, pushed it back down. And now the question is, do buyers step up in this area here and, to push it higher, or does it go back down to the bottom of the range? We'll see. So there's big difference, right, in how that looks, and why Alex was like, wow, that's weird, the huge difference there. But as I said, since I don't trade this, I just use the pound F for the continuous contract here. And for these others, when I do trade them, I don't trade them off of this platform. I trade them off of NinjaTrader, which I've used for many years. It's a great other platform, which I believe now can trade stocks, but it didn't when I first started. And gold, again, no interest, but stabilizing in this area here. And Internet came down hard. That's where a lot of the damage, the majority of the damage was yesterday. And technology, which doesn't look quite as bad. Part of that internet is Facebook and Amazon. That came down yesterday, and it's a little extended, so it could come down a little more. It's up here a bit pre-market, but no big deal. And financials stabilized. So I guess the theme here is let's gather more information and take the plays that make sense to us. And as far as the market goes, we're going to need probably another day or two before that's clear. All right.
That sounds like a good plan every day. Let's get more information and take the best of the best.
There you go.
Good morning, everyone. And so, Greg, we, as folks, I think, maybe know, we post your 15-minute pre-market review on YouTube later in the morning, and so today's I'm gonna label it today the following: turn day follows treacherous day, question mark. That was good. Good description.
Yeah, when I'm doing this, it's connected to YouTube.
Yeah.
It's live on YouTube as we speak. So there are people watching now and enjoying it. And when you put the thumbnail on there, it makes it more attractive for others to watch, other than just, hey, market review every day with the same thing. So.
Oh, okay. All right. We'll talk later. I didn't know you decided to go ahead and hit the like button, but I agree with that approach. All right, let's go. Yeah, I mentioned spiders. Yeah, nice bottoming tail. If it can get over this resistance, 30-minute high, whatever. I like diamonds yesterday. We'll see if we can sell some put spreads for tomorrow. Open positions. Old Lester. Long stock. We might, to see, I didn't want to sell a leg into a covered call after one day. But it's always in our back pocket as a strategy, which we've done with many others, like Garmin. We have a short $69 call that expires tomorrow. So it's still perfect. And then we'll just have to decide if we want to close that short call because the stock looks like it's ready to make another sprint. And that's another one of our adjusting strategies. Continuing here, Amazon, we did a bear call spread yesterday, and on this breakdown, it's, gapping up to resistance here. Let's see what it does. It expires tomorrow, so we want that melting ice cube. But if this goes sideways for an hour or so, and takes out a new high, then it could be a reverse head and shoulders. But there's still, our short strike is 2050. We're in management mode. That's all. Yeah, I saw that, Mr. Felt. Yep. I posted